They are raising their guidance for what they have previously told us for 2018. Here are the numbers. General Motors saying it will exceed its previous guidance when it comes to 2018, now giving us guidance for 2019. As for 2018, it will exceed what was expected of between $5.80 and $6.20 a share. By the way, the consensus on the street, $6.28 a share. Also expecting to exceed its free cash flow guidance of $4 billion for next year. Fairly upbeat guidance. In fact, General Motors is expecting to earn between $6.50 and $7 a share. The consensus out on the street right now is at $5.86. So clearly that's going to shift. And free cash flow, automotive free cash flow, of between $4.5 and $6 billion. Here's what Mary Barra had to say in terms of what they are seeing and her optimism about the U.S. market.
From an 18 perspective, again, it was not only a focus on really, capitalizing on the new trucks that we have out there, the light-duty trucks, but also the focus on cost reduction. So it was across the board, every element of the company. One of our philosophies is everything can be made better, and I think what we've been able to communicate related to 18 demonstrates that. And then in 19, we're really, really excited because now we have a full year of light-duty trucks. We'll be launching the heavy duties that will hit in the second half of the year. We've got a full year of the Chevrolet Blazer, a full year of the XT4, and then another very exciting Cadillac SUV that we'll be launching on Sunday. So we have a very strong product portfolio in the U.S. market. We have a strong product portfolio coming in China. So when we look at that, that is going to help fuel our 2019 and supports our guidance.
Are you worried about China overall as a market?
Well, I think when you step back and look at China, we've been there for 20 years. We've had tremendous success. We have very strong brands. We think the trade talks that are going on now are very, very constructive. The fact that they even extended this first round to have more discussion. The next is already scheduled. We know there's discussion about durable goods stimulus in country that we think will apply to autos. And then the fact that we've got 20 new, either new or refreshed products coming out. We are positioned well, and we're really taking a long-term view when we look at China, because we think over the next few years, that's a market that has the opportunity to grow to over 30 million units.
We just also asked Mary Barra about whether or not China immediately is starting to see a slowdown in terms of the consumer, and she said, well, they are seeing some of that, but that's nothing that has been material in terms of the bottom line. Guys, what's interesting here, we're coming up on the 5-year anniversary of Mary Barra becoming CEO. Take a look at shares of General Motors over the last 5 years, and I asked her this point blank, are you satisfied with your performance? That stock has done nothing over the last 5 years, nothing. And she says, I'm not satisfied with my performance, and I'm sure investors aren't either, because General Motors continues to be range-bound, 33 to 36. Right. And anytime it gets close to breaking out, comes right back down.
Now, to be fair to it, how does it look versus Ford, or even if you were to overlay it with some of the other automakers, not Tesla being included?
Better than Ford, not as good as, say, a Fiat Chrysler. And that gets back to, did Sergio Marchionne have the better strategy when he said, I'm not going to plow everything into autonomous and electric. I'll let everybody else do that. We're going to get there eventually, but I am going to ramp up SUVs and trucks. Now, GM has also improved its performance in terms of truck sales, but clearly, that's one of those things that you have to look at. Look at that stock over the last 5 years. I mean, it's if you put your money in there, you're not happy.
But part of it is the gloom of the sector, right, Phil? And I mean, it's moving up today here in the pre-market, sure. 6% on this news. The last we heard from GM, and they were laying off 15,000 workers, got in a big fight with the president, who put a lot of pressure on Mary Barra for that announcement. Ford yesterday, job cuts. I mean, the industry at large is facing
too much
real
capacity.
Challenges. So this is actually very surprising in a good way.
Well, and I think the question people have is, especially with the other news that's coming out today, that they're going to make Cadillac essentially their lead brand for electric vehicles. They'll have electric vehicles in other brands, but Cadillac will be the lead with their next electric vehicle. Can they finally do something when it comes to electric vehicles? They will talk about the Bolt. They will say we've learned a lot. The Bolt and the Volt have been successful. Fact of the matter is, when you look at their sales relative to Tesla, they're nowhere close. And I think people are looking at this saying, is this perhaps them getting in the game more?